The outlook for September 29th to October 3rd, 2025. We're going to start here on the economic calendar. Um, since we're looking at dollar majors, indices, and gold and silver, we have the dollar news and the euro and pound news selected here. So Monday we have nothing, right? Pretty typical. Tuesday we have a 10 a.m. folder. Then Wednesday we have the pre-NFP non-farm employment change at 8:15 and a 10 a.m. as well. Thursday is 8:30 unemployment claims, and then on Friday we have NFP, and then a pound speaker at 9:20 a.m. New York time. That is pretty odd. And then we have a 10 a.m. folder as well. So yeah, in general, the most important thing out of all of this is NFP on Friday. That is something to very much keep in mind, right? And we also have the close of the monthly candle for September. Like Monday and Tuesday are the last 2 days of that monthly candle, which I think is important to keep in mind, because if we're looking at the markets from a perspective of monthly power of 3, it's likely to see the last 2 days of a month potentially be kind of a consolidation. Now, looking at what the monthly candles have been doing, let's start out on dollar, right? I don't really see the need for a wick to form, right? We already have the wick. I don't really see the need, so I wouldn't pay that too much attention. Okay, let's hop into the charts and see what we're looking at. All right, so last week, or the week before last week on dollar, we completed the move down into the sell side that I was kind of waiting for through all this consolidation that happened last week. Or the week before last week now, we purged that low, and then last week we had a bullish continuation essentially from this long wick up towards these stacked equal highs or relative equal highs, and we have yet to take them, right? We've added essentially another relative equal high into the mix, right? And just keeping that in mind, right, flowing down into the daily chart, my bias was bullish last week, right? I predicted that we would drop into this daily gap and then continue higher. And my bias is going to continue to stay bullish this week because we have not met even the minimum target that I was looking for, which, if I get rid of this for 1 second, is this swing high right here, right? This was my short time frame kind of target, just the minimum of what we were going to get, in my opinion. There's obviously a chance that this puts in a quarterly shift or whatever and starts actually attacking higher prices. I think last week in the outlook, I mentioned that we have this unfilled monthly gap here. And, we have had a pretty bearish dollar index over the past months. So potentially we could see some bullish retracement that is a little more than, what that was. So anyway, let's move back down to the daily. And yeah, just what's marked out here is essentially the outlook for the week. I would want to see this gap hold and continuation higher. Now, if we get a little overzealous to the downside, we could drop into this gap and this order block as well. So I guess as long as we don't close below this this gap right here, I'm leaning bullish, right? Now, obviously, if we just melt all the way to it and then just there's nothing there, then I'm not gonna try and force a trade on this idea. But I'm expecting price to drop into this gap and then a continuation higher, right? Maybe Monday consolidation, Tuesday we drop in, even though logically, since we close this close to where this gap is, I think Monday, Tuesday, we probably kind of consolidate into the gap. And then either we have a SMR on Tuesday, maybe with that 10 a.m. news folder. Let's see if that's right. Yeah, 10 a.m. Or on Wednesday. And then probably by the time NFP rolls around, we might already have taken this high. That's the one way this works, where price action just stays clean throughout the whole week. Or I guess on the flip side, which would be much more annoying, is we just consolidate and chop And then with NFP, it's like one candle, boom, into those highs. You know, I mean, that could happen. So anyway, moving on with that dollar index in mind, we could look at the weekly charts for pound and euro. I don't think there's a need to do that really. I'll look at pound just because it's pretty clean. And actually I'll jump to the monthly just to have that kind of like higher time frame target in mind that I have on pound, which is this monthly internal gap down here, right? We have like these super clean equal lows down here with that monthly gap aligning, right? And then if we look at the weekly, we have weekly SMT at the highs. We have a weekly rejection block that we wick and just fade of hell. We always still respected this weekly gap, right? Look at the bodies, look at the bodies. And then last week we pump up into CE of this inversion and continue dropping. Now we did take out this short-term low down here, right? If we look on the daily, we did take that out, and that then gave us that retrace higher on Friday. But I think in the same fashion that this fair value gap offered bullishness early last week, and then we got the continuation lower, I see this sell side in a very similar vein, where we're going to get that that retracement higher off of it, and then we're going to continue fading it lower. So on pound, I want to see this lower gap hold, and it's essentially the same deal as on dollar, right? If we have to, I'd be fine with it going to the upper gap. And then looking at euro, same situation there. Moving on, let's pop over to ES and NQ. Now, we had been super bullish the past 3 weeks, and then last week we kind of had our first week with some pretty decent bearish days as well on both. Now, we did not reach down below previous week low and into this weekly gap here. That did not happen. But on the daily chart, we did trade too, and we are now kind of trading away from this daily gap that I was also watching last week. There just was not like an opportunity too long from there yet. And then ES retested this daily gap. 2 ways I think this week goes. Like overall, I am still very bullish. The one way it could go is we drop, like continue a drop lower, and then we run this low, which will then be the weekly gap. Or this is already the SMR, and it's just not clean for the model I trade, but we have SMT with ES here on these hourly like lows, right? Like ES has a pretty clean hourly breaker here, dropping down into premium, into the discount wick of FOMC, right? Into consequent encroachment of that here, and then rallying away from it. And then NQ makes a higher low instead of the lower low, but always still respecting that daily gap, right? Even staying in the upper quadrant of it. And then on Friday, when we have this 10 a.m. drop down into here, we have SMT with ES once again, right? ES does not make that lower low. And I think there is a very real argument that this order block here, we can tap it and then we can trade higher. And this is also a valid setup for my model. And I will be looking to long from this order block. Yeah, that's the plan, right? So this high on NQ, bullish on indices, for sure, bearish on majors. And then let's move on to the metals, which are gold and silver. Now, silver has just been so bullish, right? And now we have just taken out like a very high time frame high, right? From over here, from 2012. We took out 2012's high as it's marked out there on the chart. Yeah, I mean, I see no reason to be like the person who tries to pick a top in this, right? Like we're just bullish as hell, especially silver right now. Like silver is pumping, right? Gold, yeah, wrong market. Gold is a little more timid. But overall, my expectation here is we could potentially see gold drop into this below previous week low and then go higher from there. But on silver, I don't see us reaching down below previous week low. What I see us doing is either retesting this daily gap or maybe even more likely is a continuation Monday, and then Tuesday we drop lower and have a daily gap formed here. But overall, what I'm looking for is a continuation play on majors. And now the last thing that I guess we can add into this review here is are the bonds. To support the narrative that I've kind of cooked up there with dollar being bullish, we have a pretty bearish framework here in bonds with this bearish gap here, potentially waiting for a continuation play from there, right, on all three of the bond assets that I look at. So that would be 30, 10-year, and 5-year, I'm pretty sure. No, 30, 5, and 2, or 10, 5, and 2, I think. So this is the 2-year, this is the 10-year, and this is the 5-year. Okay, wait, let me actually just swap these two out. So we have the 10-year that put in a higher high here where we had that SMT and then bearishness, and the 2-year and the 5-year are more bearish. So you can see as we zoom into like shorter term futures, they get more bearish, which I think is a sign that people are expecting short-term potential bearishness on bonds, right? Because like people are selling more on the 2-year contract time frame than the 10-year, for example. But yeah, I guess that's the outlook. Yeah. Other than that, yeah, I'll check back in next weekend with the recap. All right, peace out.